Most people think of insurance as a product they don't use very often. We think that should change. The role of insurance should be much more as a partner in people's lives and helping them avoid bad outcomes.
You grew Risk Management Solutions RMS from a startup into a $300 million revenue business. SageSure is now over $3 billion in premium. They have 970,000 policyholders and the third largest cat bond sponsor globally. For the top producers there of SageSure, what are they doing differently?
If a producer simply goes to the customer and says, here's the cheapest premium I can get you, they're not selling on value. If they say to them, here's some scenarios of future potential losses and which policy will cover those losses and which ones won't, that's a very different kind of conversation to have.
Soft market's one of the big market dynamics. And of course, AI is the other big one. From carriers' perspective, how do you think about how you deploy AI?
I think where AI gets more interesting is how people are turning to it increasingly as something that can give advice. The producers who are doing the best job at educating the customer and selling insurance effectively, I think are less exposed to that. And I think the ones who aren't are at greater risk of seeing the business go elsewhere.
All right, Paul. So I get there's, and I know I say this on every episode, but there are so many different areas because you've had your career, and we'll talk about this here in a little bit here. You've been at a number of very high growth companies. And where I'd like to start is, can you walk us through something that's just influenced how you think about sales and growth?
Sure. I will. So I'll tell you that has nothing to do with insurance, just a personal story that's always stuck with me. So one of the things I do for fun is I mountain bike. A number of years ago, I wanted to buy a new bike and I went to a couple shops. And the first bike shop I went to, the sales guy said, great, you want a new bike? Let me show you. I've got these. These are great. People really like these. I asked him a couple of questions and we were done. And the next weekend I went to a different shop and the sales guy who I met when I came in the shop said, okay, great. Let me ask you a couple of questions first. He said, how often do you ride? And where do you ride? And what kind of riding do you like to do? And what bike do you have now? And why do you want a new bike? What is it about your current one that you don't like and that you want, why you want to get a different bike? And we talked through a few more questions like that. And they said, well, look, I have these bikes here in the shop. This is the bike I think you'd really like. And here's why. And here's how it fits everything you told me about what you're looking for and how you ride and so forth. And I didn't go to a third shop. I bought that bike from that guy in that shop. And it's always stuck with me. It was a very sort of visceral, tangible experience of what great selling looks like, of understand what your customers' needs are, what they're looking for, build trust, help them build confidence in the purchase they're making, make a great recommendation that leads to a sale. And so it's very simple. It's nothing to do with insurance, which is a much more complicated product than a mountain bike. But I think there's lessons there that I've certainly taken with me in my career and that lots of us can learn from.
Well, that's an interesting story to me for a couple of reasons. One, I spent the majority of my career either in sales and then ultimately leading sales organizations and then revenue organizations. So sales has always been that's always a soft spot. That's always kind of like at the root. And one of the things that when I was younger in my career, I would watch Wolf of Wall Street, Boiler Room, the classic sales movies. And I was like, oh, that's it. Like, that's what you need to do. You just need to be super aggressive all the time, never turn it off. And that's how you're successful. And then when I tried that, it was so ineffective.
It didn't work so well, right?
It didn't work so well. And then, especially when you start to get into enterprise, and it's funny, you said, insurance is a lot more complicated, but at its core, exactly, and you mentioned that you took a lot from that. That's what it is. It's you're co-creating a solution, and the best salespeople that are out there are just as much a consultant that can help co-create this solution together. And if you don't do that, I think it's really hard to get $1 million deals, in my opinion. And I'm saying million is like a big benchmark, but that could be a couple 100,000, whatever those enterprise deals are. I've found that to be very difficult if you don't take that approach. I'm curious, have you seen kind of the same throughout your career?
For sure, there's a stereotype around sales that maybe plays well in movies and whatnot, which couldn't be further from the truth of what effective sales looks like. And I think at its foundation, whatever business you're in, whatever the product is, unless you're buying some complete commodity like AAA batteries, which you're perfectly happy to order on Amazon and uh, you know pay the cheapest price for, any more sophisticated product, there's a degree of consumer education involved. There's a balance to be found of not overwhelming the potential customer with detail, but educating them to a point that they're making an informed decision, that you're building trust, that you're advising them well in making that decision. And that's very true in our business in home insurance. It's a complicated product, much more complicated than people appreciate. It's not a product people buy very often. Fortunately, it's not a product they use very often in terms of actually calling on it for a claim. And so people rely on a trusted advisor to help them make that purchase. And it's part of why home insurance hasn't moved online, despite what many people claimed, maybe 10 years ago with the big rise of the insurtech wave. It's not actually a product people are dying to go buy online. It's a product that people want to buy with good advice from someone they trust, helping them make that choice.
Yeah. And I completely agree. And if for people that don't know you, I mean, you have the stats to back this up. You grew Risk Management Solutions RMS from a startup into a $300 million revenue business. SageSure is now over $3 billion in premium. They have 970,000 policyholders and the third largest cat bond sponsor globally with over 3.1 billion outstanding. So you've seen a lot. And one of the areas that I really want to dive into, and we talked about this beforehand, was, when I was an agent, one of the things that I always wanted to know were what are the top producers doing? Because I remember we would do contests and I would look and I would do almost to the T what I was just telling you is not to do. And I would just grind and grind and grind. And I'd look at the leaderboard. I'm like, we're not even the same stratosphere, like not even close. And so I just started asking, like, what are the top people doing? And then trying to replicate that. So you see a lot of this, and especially since, SageSure is in those really tricky coastal regions that they write a ton of business in. For the top producers there of SageSure, what are they doing differently?
Look, in any business, you have to be clear who your customer is, what market you're serving, and focus on being really great at that, as opposed to being spread too broadly and not being as effective in any part of your market. We know who we serve and who our products are built for. We target what we refer to as a preferred customer. We write insurance focused on people with high quality homes who are responsible homeowners who take care of those homes and want great coverage to protect them in the case of something bad happening. And the producers we work with service that market. And so that's different than somebody whose lead is selling non-standard auto and trying to cross-sell home, for example. So we don't work with all producers. We work with producers who are a good fit with our product and the customers they're principally designed for. So the plays we see that work well are within that, that base of producers we partner with. And I think the thing we see that's most common among those who are most successful is they're selling on value. They don't treat the product as a commodity and sell on price. They understand that products are not all the same, even though sometimes home insurance is perceived to be a commodity. There's substantial differences between the products. And they understand the customer's needs. They help them understand not all the complexity of insurance, but the most essential elements of coverage decisions they have to make. And they make a clear recommendation to that customer once they understand what they're looking for, and they educate them on their options in terms of coverage. And then they're very successful at not only closing sales, but retaining the customer over time and position themselves to be a trusted advisor over the course of their their home ownership, maybe beyond that home through others over time, as opposed to being somebody who just facilitated a transaction.
So that makes sense. I think I'd love to dive into this a little bit more because I think most, this would actually be a good poll to run. Because I think most agents would probably say they take more of an advisory role. I mean, I know I certainly did when I was an agent, but I'm curious, like, what if everybody thinks that? What is true advisory? What does that actually look like? Because not everybody's a top producer in this area. Are they doing something differently in how they're running their discovery? Is it their ability to provide them with information that other agencies don't have access to? And I'm just curious, in your experience, what does that look like?
I'm sure there are multiple parts to it. I'd say the part that's most evident to us and that I had in mind and what we were just talking about is, and we see particularly visible now in a softening market where we have more competitors coming to the market, people being more aggressive, wanting the business. And that's, to be clear, that's very different than the world we've lived in for the last several years. We've been in peak hard
100%.
market conditions. Many of our competitors left these markets. Some of them went out of business entirely. Some withdrew from states entirely. Others just stopped writing new business and canceled existing business and so forth. And now the market softened. Reinsurance rates have come down significantly. Other things have changed in the market. Capital is more readily available, and there are more people in our markets who want this business. And when our producers have a customer, a potential customer who has just bought a home, let's say, and needs home insurance, we see very different patterns of behavior. So people may aspire, as you say, to all being a trusted advisor and so forth. The way they actually engage is clearly different. And what's one way that's most visible to us is the differences in product and the degree to which producers actually, in some cases, understand those differences and truly can relate the relevance to the customer and how they sell. So to give you an example, if you pick a state like Texas, we have a product that has a number of features. There are other products that are very different. And so we'll see a case where a producer may quote multiple products. They'll find the lowest price one and they'll go to the customer and recommend that product and say, this home insurance, here's the price, it'll satisfy what you need for your mortgage, and I can get this bound for you. That may be a surplus lines policy that has a roof payment schedule, which means for your 12-year-old roof, you're going to get however many cents in the dollar for a roof claim. It may have restricted water damage coverage, and other forms of restricted coverage. We have a policy that's an admitted policy with full replacement cost roof coverage. That's a all perils policy as opposed to the other policy being a named perils policy that includes mitigation programs that you benefit from as a policyholder. It's a radically different value proposition, our product versus that other product. If a producer simply goes to the customer and says, here's the cheapest premium I can get you, they're not selling on value. They're not setting themselves up as an advisor to that policyholder. If they say to them, look, these are some of the key differences you should understand in the insurance products you could purchase. Here's some scenarios of future potential losses and which policy will cover those losses and which ones won't, how much of a recovery you'll get. That's a very different kind of conversation to have. And the customer, you may decide one of those is a better fit for the customer than the other after you get through a discussion with the customer, but that's a very different way to engage. And that's that's what I'm getting at when I talk about the differences we see in the behaviors of the most successful producers we work with.
One of the interesting things on that, and I'd be curious on how you guys help with that. You guys have definitely put a huge effort into the technology. The technology is known to be extremely good, and that's not just me saying that. That's from agent feedback directly. But one of the things I'm curious about is one of the things I hear from agency principals all the time, and I've kind of got a different. My background. I was an agent, but I spent the majority of my career on the insure tech side. And so for a long time, and I still get these like from agencies, I'll ask them, what is something that doesn't exist today that is a big problem you have, and you would love to find a solution, or somebody would work with, or a company to do this, or whatever that might be. And the number one thing that always comes up is new producer onboarding and training. And in so many agencies now, it's very different at and I'm not saying all agencies are like this. I just think a lot of them, it's passed on through tribal knowledge and shadowing and ride-alongs and things like that. Where when I had a digital agency, right, it was very, here's what you do here, here's what this situation is. But it wasn't really, I wouldn't put any of those as like true advising, like what you are talking about. And so my question is, do you guys help agencies at all with that? Meaning, like, you're showing, okay, so you mentioned your policy is better. Makes sense. And obviously there's going to be some bias involved with that. But that being said, do you have whether it's through the tech or through resources that you provide, that can educate on why these specific things are better? And of course, the easy answer is, well, that is the agent's job. And I agree with that. But I am curious, do you guys support that process at all?
Good question. I think for several years, as we've gone through the hard market we talked about, our focus has been very much keeping product on the shelf for our producers who desperately needed product to sell, securing capacity. You mentioned the cat bond issuances we've done. We'll place on the order of $7 billion of first event reinsurance limit this year across all of our carrier partners. It's been a big focus for us to ensure we have the capacity and the support from reinsurers and cat bond investors and others to enable growth in these markets and keep supporting our producers and having insurance to provide to their customers. During that period, I'd say there's been less focus on producer education on the product, and it's been a bit taken for granted that this is what we stand for as a brand. People of history working with us know that. Like I said, the best producers already sell on value, sell on the gaps of understanding the key differences in products that customers need to understand. As we've come into the softer market, this is something we've been reflecting on a lot, is how do we help, what role do we have in helping our producers understand those critical product differences, bring them to light, help them educate the end customer. I just recently did a webinar with one of our larger producers where we walked through some examples and said, if you were selling a named perils policy to a customer, we said, here's an example of a real claim with one of your customers that we paid recently, where somebody was cutting down a tree in their yard, DIY, didn't hire somebody else, made a mistake, the tree fell on their house, damaged their roof and their gutter and so forth. That was a covered loss. It would not have been a covered loss under a named perils policy as accidental damage. And so we walk through some of these examples, and we do things like that to help educate our producers on product differences. You mentioned technology. We control all of our own technology, build it ourselves. That lets us do things like promote aspects of product features and mitigation programs and things like that into the quoting experience to remind our producers they're there, to remind them they can bring those up with customers. And there's more we need to do. We have in this shifting market, there's, as you say, part of it is the job of the producer to be an expert on the products they're selling, but there's more we can do as well to help them with that.
Well, and that makes total sense. And I do want to talk about the soft market and dive into that a little bit deeper as well. I think one of the interesting things, and we talked about this a little bit, was that, you mentioned how, you guys, these are my words, not yours. Like, you guys were kind of a godsend during the hard market because you were writing stuff that everybody was running away from. And so you gave agents a lifeline to be able to write a lot of that business. But the interesting thing is now, as we're going into a soft market, as like you said, there's more capacity and people are going to start to be more aggressive. I've already seen carriers be more aggressive from a rates perspective and just opening up what they're willing to write with bigger agencies. And they're much more, they think much more 3 to 5 years down the road. But as a new agent, and I remember when I was a new agent, it was if somebody's got a pulse, I'm going to try to find a policy for them. And I'm probably just going to try to find the best fit that I possibly can. And I'm not going to go through all of that. And I'm not saying that that was right, but it was just kind of the reality. How do you close that gap in, it's like they're probably going to, the number one thing I'm thinking is somebody writes, let's just say a couple hundred policies with the carrier. That carrier went way too aggressive on trying to drive new business. That carrier's out of business. Well, that is going to be a world of hurt for that agent. How do you guys try to support that area? I know it's probably tough too, because you can't just say, oh, we've got the best product, like we're going to be here in a couple of years, because that doesn't mean these other people aren't saying the same thing. Is that more just looking at the track record and things like that? Or what does that look like?
It's been a rough few years, to be sure, for a lot of our producers. And that I've lost track of how many conversations I've had with our producers over the last 2, 3, 4 years who've had hundreds or thousands of policies they've had to move because they wrote business with carriers who then fell apart in the hard market. And again, either went out of business entirely, withdrew from regions, whatever it was. That's a lousy place to be as an agent. And we have lots of people saying to us, I will be a loyal partner of yours forever. You've been here for us. The stability you have is critical for us and for our customers. And whatever happens to the market, like we are, strong partner of yours forever and appreciate your stability and you being here for us during hard times and all that. Then a softening market comes, and what happens? They still have those intentions. We still have the history together, but you have producers who haven't been through that before. You have more competition. I know one of our producers in Louisiana just called me last week and called to say, hey, here's what we're seeing in the market in terms of, I won't say names, but certain large captive carriers getting really aggressive, coming after the business they haven't wanted in a long time. And so people are finding themselves in a more challenged market, having to compete or perceiving they have to compete more on price.
Yeah.
And so I think the point we were talking about of how do you sell on value, the strategy remains the same. I think the tactics change. And for example, what we're seeing now is producers saying, for me to not lose a lead and to be in the game when someone calls me and says, hey, I've got a quote in this ballpark from somebody else, they need to have something to put forward from an economics perspective that keeps them in the game. Is the tactics we see changing, in some cases at least, are producers saying, look, I got to start with a more stripped down version of the product. And for example, start with the roof schedule option of the product to get the premium down, or start with a higher deductible, then get the customer in the conversation, then talk them through, here are the considerations of what your options are, and often still end up in a good place in terms of the customer having better coverage and buying the higher value option or product. But they're working through that. And I think part of our work as well is in supporting them in that and how they go through the quoting process to bring the customer along in a market that's very different than it's been for a number of years.
Do you see I pretty much got the answer to this, but I'm curious, do you see those top producers having to move some of those accounts because the pricing, it sounds like the top producer had reached out to you. My guess is that something was along the lines of, hey, are you guys going to be getting more competitive because we're getting a lot of heat from X carrier that's coming in here. I don't want to switch to business, but this is getting hard. My guess is that was the genesis of it.
Yeah, exactly that sort of conversation. And so we're in a softening market. Reinsurance rates are coming down. We've just completed most of our reinsurance program renewals across many of our carriers. In a number of states, reinsurance represents 20, 30, even more percent of the end cost and retail cost of the product. And so reinsurance market softening translates directly to improvements in some cases, in some markets, on pricing of the product for the customer. So so yeah, that's part of the conversation is what are the plans, what's happening in terms of pricing for the product, as well as, like I said, the tactics of, okay, what do we do and how do you help us operate in this, in a very different market dynamic than we've been dealing with for a while.
And of course, soft market's one of the big market dynamics. And of course, AI is the other big one. And from carriers' perspective, it feels like there's kind of oftentimes, and I know you guys are an MGU, but and operate as a carrier in a number of different ways as far as how you actually go to market. One of the things I see from a carrier perspective quite often is they want to use more AI, but at the same time, there's reasons politically that it's harder for them to deploy more, and then some real security reasons on why they need to be kind of careful on doing that. For you guys, how do you think about how you deploy AI? And I'm sure you're using it quite a bit on kind of the core product, because I've heard you say before that you guys kind of sit in between more of that kind of the legacy type of carrier and an insure tech. Has that changed as you're going into this new era, or how do you think about that?
Well, on your last point, I would say I think of us as post legacy, pre insure tech, in terms of where we sit in this general evolution of the industry. So we've been writing business for 16 years now. The fundamentals of our business are very much about being great underwriters and technology enabled, but not about being a tech business, and very, very different than a lot of what InsurTech was about, with direct to consumer and tech first and worry about loss ratios and underwriting second. That's never been our game. For us, we've always been much more traditional, if you will, in the sense of believing that the only way you build a durable business in this space is to be a great underwriter and consistently generate underwriting profit. And at the same time, we invest very heavily in technology and analytics to enable us to do all of what we do and do it well. So that's where we sit in the world of insurance. To your question about AI specifically, we're using AI throughout the business, as you'd expect. We use AI and we're using it very, very actively in software development. We use it in building a whole variety of sort of models and capabilities in the data science realm that help us do various things in the business better. We use it operationally to improve speed and efficiency of various back office operations. So it is obviously, the world of AI is rapidly evolving, and we're an active adopter and user of it in many forms. I think in a way one of the more interesting questions in this space is, what does AI mean for the future of insurance distribution?
Absolutely.
So we can talk about that for a minute. You've just seen what's happened to the publicly traded stocks of a number of insurance distributors in the last couple of months, and how spooked investors were. I think a lot of that was overblown, but it raises important questions about what does happen in the future and where does AI sit. So I can tell you my own view. I don't have a better crystal ball than anybody else, but my own view on this, I think a lot of that early reaction was overblown. What you see happening today is a lot of all of us, I think, are experiencing the move to using chat AI tools as the new front door to the internet, as it's often explained. So instead of going to a search engine and searching for information to find an answer to the question you have, you go straight to a chatbot like Claude or ChatGPT, and you actually ask your question and actually get an answer much more efficiently. So it's becoming very quickly the new front door to the internet in that regard. From an insurance shopping perspective, people shopping for insurance on the internet have never been great insurance customers. Most of the people shopping there are shopping there for a reason. They've been dropped by their existing insurer. They've had significant rate increases, often due to loss history or other characteristics, or they're just highly prone to churn and not being a very loyal customer over time. As the data has shown pretty clearly that the quality of those customers in terms of loss experience and longevity is poor. And most of our producers, back to your earlier question, our successful producers are not sourcing customers off of internet searches as opposed to other ways to find people who are in the process of buying a home. So the customer, instead of going through Google, now goes through ChatGPT to search for insurance. That doesn't change anything fundamental about who they are as a customer and how good a fit they are relative to where customers come through different channels today. I think where AI gets more interesting is how people are turning to it increasingly as something that can give advice as it's able to pull from lots of other information and experience and summarize that in effective ways. And so I think back to the earlier discussion of the role that producers play in educating the customer and giving them good advice and recommending product. I think the scenario I think about most often is what happens when the customer comes to you as an agent and you give them a quote and a product recommendation. And back to my story about buying a mountain bike, to the extent you've educated them well on the decisions they have to make, on the product options, and they trust that they feel confident in making the decision to buy the product you're recommending, then you're done. To the extent the role you play is largely saying, here's an option or two, but they don't feel particularly informed or sufficiently confident in making that decision yet. In the world of AI, where they increasingly turn next, may not be to another agent, it may be to their AI chatbot to say, here's the quote document I got from my agent. What do you think about this? And if you think about how these AI tools work, you'll get an answer, and then it'll ask you a question about what to do next. And you can easily imagine the scenario, which is, well, this product has these features and these questions about it. Would you like me to give you some examples of claims when this product might not cover you fully? Oh yeah, sounds like a good idea. Yes. Okay, here's some examples. Next question. Would you like me to suggest some other insurance options that might not have those deficiencies? Oh, sure. Yes. Then before you know it, where's that customer going? That customer's finding a different channel to buy insurance, whether it's through that, I doubt it's through the chat tool directly, but you may end up with a different agent or through some other distributors, some other producers, with some other producer at that point. And so I think about that scenario when I think about where AI is going and what it means for insurance distribution. And I think, again, back to what we were talking earlier, the producers who are doing the best job at educating the customer and selling insurance effectively, I think are less exposed to that. And I think the ones who aren't are at greater risk of seeing the business go elsewhere.
An interesting thing about that is twofold. And when I think about this from like an agent's perspective, one in Kyle when Kyle's from Clear Cover's episode, and he was talking specifically about, there's going to be this AI orchestration layer, and we're starting to see this right now, right? Like at first, the chatbots were essentially used as the AI tools, the frontier models were used as a search engine. And then you started to delegate tasks. That could be copywriting, that could be drafting emails, things like that were some of the most common ones. But now we're moving into, it's not that we haven't been here, like people that were using OpenClaw when it first came out were already doing this, but now we're going into more of this orchestration layer. And this is where in Cowork, that is probably the one that's broadened this to the most people, Claude's Cowork tool, where it's going and it's working with other AI agents and it's running a series of tasks to an ongoing task in what it's doing. And we're moving into that layer. And the interesting thing, and what I'm hearing you say is, and it sounds like there's a very big opportunity. One, the insurtechs out there that nail that orchestration layer, or if that ends up being one of these frontier models, if the insurtech that can plug into that in order to pull that off, there's probably a huge opportunity there. But two, to your point, it feels as if the agent that's going to position themselves different is going to be the one that builds the best relationships and has the most expertise. Because one of the interesting things is if you take any type of like AI fluency course, and I recommend people do this, Claude's got a great one on this. And one of the exercises that they have do, and I'm not saying that this won't get more accurate, it will, but it says they want you to see essentially the flaws of these models. And so using Opus 4.6, which is arguably the most powerful model right now, now that could change by the time this episode is even released, but in Claude's Opus 4.6, I used to be obsessed with the game of squash. Got into it when I was later, but I went all the way in, learned all the strategies, everything else. And so I said, give me a basic strategy for a piece within squash. And when he gives it to you, it sounds great. If you didn't play that game a lot, you would read that and say, oh, this makes sense. This is in the weeds. This is detailed. Like, this is really good. But if you're an expert on this, it's missing key pieces. And I think that's very much what's going to happen in the nearish term, from people that are going on to get insurance through just through one of these chatbots. And the one that you're referencing, of course, was the when Insurify did the ChatGPT bot. That's what sent a lot of the markets in chaos when it came to the insurance world. So I'm curious if you see that similar, in that relationships and expertise are going to be those differentiators, or if you think it's something totally different than that.
I think you have to start with the advantage that producers have today is they have the customer.
Mm-hmm.
Any successful agency has a strategy for how it acquires leads, which, to my earlier point, is not just about people searching for insurance online. They're plugged in with loan origination officers and real estate agents and others in their community to capture a lead at a point where someone has need and intent to buy insurance. So that remains their starting point of they own the customer. The question then is, do they convert that customer, or what happens? And so, to my earlier example, you can imagine one way of losing the customer is you don't serve them fully enough in helping them make a good decision, a good informed decision. I think you can talk about, well, the AI models have limitations and it's dangerous that people go there and so forth. The reality is that's just the pace of at which the technology is developing. It's getting better and better very quickly. And so I think everyone can point to examples and entertain themselves with cases of the AI did something silly or ridiculous or gave me an obviously false answer. And I think it's important. I mean, I have 3 teenagers and they're growing up with this stuff in their lives. And a core part of learning how to use the tools or using the tools is learning how to use them well and when to trust them, when to be skeptical, how to check that the results make sense and so forth. And that's part of just AI literacy that everyone's having to pick up and with the evolution of these tools. But they're going to get better. They already can give you pretty good answers to a lot of complicated questions about insurance. And so I don't think the bet anyone should make is they're not going to be good enough for people to trust and to be making decisions. There may be people making bad decisions, to your point, without realizing they're making it. And the question more for producers is, they have the customer, they have the lead. How do they deliver a great experience to that customer that helps them make a confident, well-informed decision? Which, by the way, probably does involve in the future, them learning how to harness those tools themselves.
100%. Totally
And
agree.
so the way I think about it, and you asked about this in a slightly different way a few minutes ago, if you've been running an agency for 30 years and you have decades of experience in advising people on what to buy, you see them having claims, you see what happens when they have claims, and you're selling to a customer today, you bring all that to bear and giving them advice and saying, I've seen this before, I had a customer who went through this and so on and so forth. Then you hire a new producer. How long does it take for you to get them to the point they're as effective as you? Not just in their technical knowledge, but their ability to pull together that sort of history of experience and relevant examples and so forth for any one individual prospect. AI can be a great accelerator of that. If you can harvest your knowledge and your data and your experience as a business and train something that works off of that and is relevant to your region and your customer base and your products, that can be a hugely powerful multiplier of your ability to operate well as a business and also get newer people up to speed much more quickly and make them as effective as a more experienced agent. So I think that's the businesses who are producers who are leaning the most into how they can take advantage of AI or thinking about it along those lines.
Yeah. As we're talking about this, you could probably get 70% of the way there with Claude's skills and then using Claude's style of learning to get there, which I think is probably pretty interesting. So Paul, we talked about a lot. We talked about the soft market. We talked about the growth of SageSure, about what the top producers are doing. I'm curious, you've been in a number of these companies. You've seen a lot of success here now at SageSure. If you and I are sitting down in 10 years' time and everything went to plan, where will you be? What will you be doing?
I'll probably still be here. That's my plan. We have big ambitions. We feel like we're just getting started, and I think part of what motivates us is we have a vision of a future for this industry that's very different than it is today. And I said something in passing earlier that I hoped I'd have a chance to come back and clarify. So this is it, which is, I said to you, most people think of insurance as a product they don't use very often. We think that should change. We think that insurance, we're not the only ones who think this, but we think insurance should be a much more, the role of insurance should be much more as a partner in people's lives and helping them avoid bad outcomes, not just being there to help them recover when they do. And so if you look at a lot of what we've been investing in recent years, it's been driving toward that vision. It's bringing mitigation programs to life where, where a customer doesn't just get insurance from us, that's, as we talked about before, good coverage, and we'll be there for them when they have a loss and so forth. It's also advice and programs that help them avoid losses. So we've been rolling out programs to help people that monitor their homes proactively to avoid having electrical fire losses. We've been doing work in the field to help people mitigate their homes to prevent hurricane damage and future catastrophe events. And the response has been incredibly positive from our customers and our producers about the notion that their insurer is there for them. They have a vested interest in, we obviously have a shared aligned interest with the policyholder in them not having damage in future events and not having tragic things to go through. But that to us is a big part of what motivates us as a future where that's a much more regular part of how people think about insurance and the role we play in our policyholders' lives.
And I think that'll fundamentally shift how people do think about insurance, 100%. Insurance for every day, not necessarily just the worst day. So I think that makes total sense. Paul, this has been great. I appreciate you coming on. I know I put you on the hot seat on a number of questions, so I appreciate the answers. This was a lot of fun.
Thank you for inviting me on. Enjoyed the conversation.